public sector going. So yeah, just in short, 40% plus across categories.
40% growth out there. The 1.3 million units became 1.9 million units. You said you'll do better, but you stopped short of giving us a number. Where do you see that number at? And also the margin band has been quite wide for a long while now, 35 to 45%. Narrow down a little bit, right? For FY24 on an average, what can you do?
See, I guess I try to kind of stay on the conservative side, and I guess we've done 40% plus margins also consistently. We are trying to invest for growth. As you see, we're trying to increase visibility and reach of MapmyIndia as a brand, our consumer app, Mappls app, and our consumer gadgets, Mappls Gadgets. You know, that has a strong knock-on effect on our B2B business as well, besides the B2C opportunity being large in its own right. EBITDA margins you can expect to be 40% plus over the course of the year. I'm not going to get into quarterly because
that works well. And also the number of units, as you said, 40%, 1.3 became 1.9.
It's a little bit. That's a little bit function of kind of how new vehicle sales pans out in the year. But we can't control how many cars or two-wheelers get manufactured. But obviously, our uptake in that is increasing, and so we've grown faster than industry growth. Plus, we are also going after the existing vehicles on the road. So in general, we're quite bullish on number of vehicles that will go. I don't want to give a number right now because a little bit we're dependent in that on how the automotive industry or market does.
All right, just a couple of questions, Rohan. One is you said that you are looking to increase your marketing spends and awareness, etc. In the fourth quarter, your marketing spends were lower. Was this a conscious decision? I mean, are you looking to, increase it in FY24? If yes, so what proportion of sales are you targeting as marketing expenditure? And the second one, on your order book itself, you said the open order book is around 900 plus crores. Plus, there is a lot which is not reflected in the open order book. So if you could add that as well and give us the potential order book that the company could have and break that up from, various verticals, auto, consumer tech, defense, drones, all these things that you've been talking about. So one is on marketing spends. The second is a detailed look into your order book.
See, marketing spends are a function of one is calibrating in the fiscal discipline or fiscal rails that we set for ourselves. And also it's a function of when we want to go about doing it. There's a right time to do marketing spends for us. So in a sense, you can think that we've been building up and definitely we'll spend more on marketing. But as a percentage of sales, I don't think, there will be a difference, but it'll be within the realm of what our growth in profits and growth in revenue is. So again, stopping short of giving some exact numbers because we want to maintain that, ability to calibrate up or down. And the second is what you said on a potential order book. There's a lot of rate contracts or subscriptions that we sign, where it's dependent on how much consumption the customer will do. And hence, because it's not contracted or we are not assured it, we don't reflect that in our open order book. Open order book is a reflection of what we really believe contractually that we will get. So that's why I mentioned that 250 plus customers added, and also a lot of existing customers who are on kind of pay-as-you-use models. So again, it's hard to estimate that, and really no point. That's why, every year revenue is a function of both, based on open order, but also based on consumption in year. So
two solid numbers that we've got is 40% growth at least, with margins of more than 40% on average. So those two, we're thanking our stars for that. But what about G Trophy? As a percentage of your total open order book, how much is on G Trophy? And just coming back to what was the contribution of G Trophy? I mean, what did you end FY23 with on G Trophy itself?
So G Trophy, we correlate G Trophy to our IoT-led business because primarily G Trophy is our IoT-led business. There's a little bit of IoT-led business that MapmyIndia also does. So if you see the overall, I think 280 crore, about 60 crore came from IoT-led. And remember, G Trophy is not really inorganic. We paid 13 crores to acquire a team of 125 and a revenue of 8 crores. I think growing that, and MapmyIndia itself had a 25 crore IoT business. So it's grown 140%, but a lot of it is to do with MapmyIndia's own organic efforts. But we're very happy about how Gtropy is doing. It's set up as a separate company. So that's one. And the second is, out of our 918 odd open order book, you can think large majority is map led, around approximately 3/4 to 80%. So less 20% is coming from IoT led. And in IoT led especially, there's you can't really estimate how many new subscriptions or new devices customers will buy. So that's why adding a lot of customers there is super good, because that is where the surge will also come in.
All right. Thank you so much for joining in and giving us all those details. You've broken up your order book for us the best way you could, and given us an outlook on the numbers going forward. 40% is something that we'll be looking at, both your margins as well as revenues. So that's MapMy.